More and more Bitcoin are taken off exchanges, which means they can't be sold anymore. Plus, Cardano gets adopted by Grayscale. This and more is what we'll cover in this news video. What's up? My name is Caroline and this is Wealth in Progress, where you'll learn how to make passive income with cryptocurrencies. Today we'll look at some of the biggest news of the past couple of days, both about Cardano and about the general market. As always, this is no financial advice. Even though some of the news are very bullish, that doesn't mean that it will just go upwards from now on. The market is still very volatile and prices can go up or down at any time. So first of all, we've got this news that states that there has been a Bitcoin outflow from spot exchanges that has reached a yearly high. So what that basically means is when Bitcoins are on exchanges, they can be traded, they can be sold, but when they're taken off exchanges, they're usually taken into a wallet and they can't be sold in there. So that's usually a bullish sign, because if people take their Bitcoin off or their crypto off to a wallet, they don't seem to have an intention to sell it in the near future. So we can read here, investors have changed their tunes on BTC as the deposits to spot exchanges have declined with the withdrawals reached a yearly high. So earlier this year, it has been the other way around. There has been probably a yearly high registered of deposits going into spot exchanges because people wanted to sell their BTC or other crypto, and now it's the other way around. The article goes on to say that they have their data from on-chain data, and then they say, furthermore, it showed that most of the withdrawals come from retail investors, but whales and institutions have also accumulated BTC lately. So in order to have big price action, only retail investors won't be enough, obviously. The big actions will still be caused by the whales and institutions, but apparently they're starting to accumulate BTC as well. So here you see the data or the charts for the spot inflow and spot outflow, for the spot exchange inflow and outflow data. So you can see here that's the spot exchange outflow. So that means that people withdraw their BTC from the exchanges. And you can see here, so it's barely visible, but it's a gigantic line upwards. And on the other side, you see the inflow transactions. So that's people depositing their BTC on exchanges. And you can see that has fallen quite drastically. And then further on, the article goes on to say, so it's talking about whales and institutions. After a short pause and even sell-off in June, wallets containing between 100 and 10,000 Bitcoins, so these are referred to as whales. So these wallets accumulated roughly 60,000 coins in just one day at the start of July. As a result, their total stash increased to more than 9 million BTC. So as of now, the whole market still depends heavily on BTC and its price action. So it's kind of good to see that we're moving in the right direction. People are taking their BTC off exchanges. They want to HODL it again. They have bought maybe some more. They've stacked up, and now they want to put it in their wallet and have it for the more medium or long term. This doesn't mean that we'll have a super price increase tomorrow, so this will probably take time, but it's just good to see that we might have either reached the bottom of this low or we might be very close to it. Okay, next up, we've got some great news about Cardano. It's actually a few days old, but I just find it so interesting that I still want to pick it up in here as well. And that is Grayscale. So that's a cryptocurrency investment company that has recently been holding the majority of their coins in BTC and Ethereum. And they have now added Cardano as its third largest holding. So you can read here, Grayscale has announced that it has added Cardano to its large cap fund. The ADA holdings now make it the third largest holding in the fund behind Bitcoin and Ethereum. You can also see here the company exposure to ADA is currently 4.26%. BTC is still the largest at 67.47%, and Ethereum is 25.39%. So that's pretty cool. You can see here the allocations, and you can see Cardano is number 3. It's of course much smaller than the two biggest ones, but then if we look in comparison to the other coins that the fund has in it, It's still it's 4 times bigger than, for instance, number 4. So it's really exciting that they've picked it up and that it has gotten quite a big allocation actually. Now that has been announced on July 2nd, and as you can see, that has given us quite a nice price increase here. So that's July 2nd. So we've started the day at around $1.32, and then we've ended it at $1.39. And we've since gone up all the way to $1.49. That was 2 days ago. Now, this is the daily chart, and you can see we're still testing the 100-day moving average, so we couldn't break through that yet. But again, a lot of the future price action will anyway still depend on BTC. By the way, I'll be making a video about my past few trades with Cardano, because what I thought was, well, okay, if we're trading sideways for a bit, why not just trade those ups and downs? And so I trade on the hourly, and you can see here, if we extend that a bit, you can see we've got some nice ups and downs, and I've traded that a bit, and so I'll share my past few trades in a coming video. So be sure to hit the subscribe and notification bell button so you'll be notified when that comes out. Next up, we've got some interesting news, I find, at least, and that says Elon Musk is losing his power over the crypto community after his latest tweets failed to boost Dogecoin or Bitcoin. So while I am a fan of Elon Musk and of Tesla and his inventions, I found it quite annoying that his recent tweets were just not, it didn't make a whole lot of sense to me, and then the market reacted so strongly to them, so I found that a bit annoying. So I'm quite glad to see that apparently the effect has worn off a bit. So you can see his tweet here that he tweeted on July 1st, released the Doge and then a meme. And if we look at the price chart of Doge, USD. So if you look at July 1st, you can see it apparently didn't have any impact at all. In fact, it went lower actually. So I'm quite glad to see that it just doesn't have that huge impact anymore. I mean, it just can't be true that one person can have a gigantic impact on the whole crypto market. So I'm quite glad to see that, to be honest. And last but not least, I found another very interesting piece of news, and that says that UBS advises to stay clear of cryptocurrencies once regulators will crack down on crypto. So I find that very interesting. So UBS is Switzerland's largest bank and probably one of the largest in the world. And it basically does what all the banks do. So to be honest, what I read in here is, oh my God, we're scared because we could lose our job or our purpose, because with crypto we could theoretically replace banks. And what I'm also seeing is we don't understand the market. So that's honestly what I'm getting out of this. So let's look at it. So what they're basically warning people about are cryptocurrency regulations. So they say, so you can read here, citing that China's latest crackdown extending to miners, banks, e-payment networks and social media, hurt crypto prices and operators. So the UBS analyst wrote, regulators have demonstrated they can and will crack down on crypto. So we suggest investors stay clear and build their portfolio around less risky assets. Okay, so for one, yes, it's true, we've had more regulations in China and they particularly went against miners, but overall, no country can ban crypto. So yes, of course countries can make it more difficult, but on that note, I have to tell you a very interesting story that Kieran told me. So he told me that when cars were first invented in the beginning of the 20th century, so one of the hotspots has been in the UK. So they made or produced a lot of cars, but then all of a sudden they basically became totally obsolete, and the center of the car making or car producing industry moved to the US. And you know why? One of the main reasons was because they imposed ridiculous regulations. And the one regulation that Kieran told me about was that they were so afraid that there could be an accident that they had a law that that said before, in front of a car there always has to be a person running like 200 meters in front of that car and has to look around each corner or each curve and look if there's nothing coming. Otherwise you can't drive a car. So you have that person running in front of the car and checking to see if everything is clear. I mean, that's nonsense, honestly. So what did the car industry do? Well, they just said, okay, we can't work with that. That's ridiculous. We'll just go somewhere else. And I think this is what would happen with crypto as well. Sure, China has made it more difficult. What does crypto do? Well, it just goes, or the companies just go to other countries. Miners just go to other countries where it is more simple. And if we look at El Salvador, for instance, they're more than happy to adopt BTC as legal tender, and they will probably also adopt people or companies that are interested to use crypto or that build something on crypto. And there will be other countries that will follow in El Salvador's footsteps for sure. So what I think is, if the big countries, or if the leading economic countries decide to impose unnecessary regulations on crypto, what will happen is it will just go to other countries, honestly. I'm sure there's a need for that. Now, another thing that's very interesting is if we scroll down to the bottom here, let's read this part. The bank, however, reportedly recognizes that some clients want exposure to cryptocurrency, particularly Bitcoin, and is rumored to be considering offering crypto services to wealthy clients. A growing number of investment banks are already doing so, including Goldman Sachs, Morgan Stanley, and so on. So what does that say? They're giving us a warning, and then at the end they say, well, okay, it's not UBS saying it, but apparently that's known, that they want to offer it, but only to the wealthy clients. I mean, what? Like, why shouldn't they want to protect the wealthy clients? That doesn't make no sense at all. What I honestly think is that they probably want to pick up some for themselves, and they want to have the prices low, and that's why they give out these warnings for the retail investors. Honestly, I just can't take it seriously. It's ridiculous. Let me know your opinion on that in the comments. Like, I don't know, maybe you understand it better, but to me it doesn't make any sense. Okay, so that's it for this video. There will be another trading video coming up and some more news in the coming days. So be sure to hit the subscribe button and the bell to be notified when those come out. And also, if you like this video, hit the like button down below and share with all your friends. Thanks for watching, and I'll see you in the next video. Bye!